back, and always a delight. One of these days I'm going to pass. And that is Professor Michael Busler is back with us. He's a public policy analysis professor of finance there at the Stockton University in New Jersey. muckrack.com/Michael Busler is the website. There's a picture of that landing page. And I'm probably his longest perpetual student. But Professor, I look forward to the day where I get a thumbs up from you.
Always a pleasure being here, Perry. Thanks for having me.
You bet. Well, the Dow came out of the chutes roaring this morning. What's going on?
Well, you know, trying to predict what the stock market is going to do on a day-to-day basis is very difficult. Usually, when you see a big jump, either up or down, in the stock market, it's because investors believe the economy will do better, and that means corporate profits will go up. And when corporate profits go up, stock prices go up. So people want to buy stocks where they think stock prices are going up. Today, President Trump, and I think in about an hour or so, will be certified as the election will be certified, and he'll be certified as the President of the United States. Maybe the stock market was thinking, we're pretty sure that's going to happen, but with everything that the opposition party seems to be pulling these days, maybe that would have been somewhat in doubt. Now that it's going to go through, I think investors are more confident about the economy. And also, you know, the last few trading sessions, the stock market has gone down somewhat. So there may be some instances where investors say, look, some of these prices, stock prices have gone down, and now they're a pretty good buy, so I better jump in now before they get higher.
Okay. I want to ask you some basic questions. We've kind of gone over this in the past, but here we are on the threshold of a new administration with all of its anticipation. And if today's 300-point bump is because they're happy about Trump being certified, so be it. But one of the things, yesterday, as a matter of fact, I had a long conversation with a real estate agent here in our own hometown, and we're talking rates and prices and home costs and all this and that. And one of the questions that popped up was, if the president's first order of business is to make us energy self-dependent again, does that incentivize the housing rates to come down?
If we're energy independent and energy dominant, means we're going to vastly increase our production of energy. And of course, when you increase the supply of anything, the price comes down. So Trump expects, now he's very optimistic. He says he can cut energy prices in half within a year. That's very optimistic. Even if he doesn't quite get there, lower energy prices will mean significantly lower inflation. And why is that? Energy prices account directly for about 8% of the consumer price index. Indirectly, it affects almost 30%. In other words, fuel prices go down, we pay less for gasoline, less for heating oil, et cetera. But then indirectly, farmers are going to pay less for energy. Manufacturers are going to pay less for energy. That tends to keep their costs down, and any other inflationary pressures there may be will be offset by these lower energy prices. As energy prices go down and inflation eventually goes down, I'm a little critical of the Federal Reserve for cutting interest rates the last 2 or 3 times because we haven't brought inflation down to where we want it. But nonetheless, as energy prices go down and inflation goes down, now the Federal Reserve will say, well, look, inflation truly is down. They can start to bring interest rates down. And that's what I anticipate happening. And I don't think it'll be early in 2025, but probably by mid 2025, when you see inflation is again heading downward, I think the Federal Reserve will start to lower interest rates. And more importantly, the market will react to that by lowering rates. You may notice the Federal Reserve cut the federal funds rate 3 times, September, November, and December, and yet market interest rates, as measured by the Treasury bills or mortgages, those rates have actually gone up. I think all of this means that when inflation starts coming down, truly, as the year progresses, you'll see interest rates come down, and that will make home buying a little easier for most Americans.
Okay. Just kind of a sidebar question. Is the inflation that we're dealing with now different than the inflation that Carter dealt with when he was president?
Yes and no. So much of it, the inflation we have today is due primarily to the rising energy prices, the huge federal government budget deficits, which have caused excess demand in the economy, and a very loose monetary policy. Now, during Carter's time, the budget deficits were not as great, but you still had the energy prices and you still had the money supply increasing too rapidly. Arthur Burns was chairman of the Federal Reserve, and he was criticized all during the late 70s for not doing more to tighten up on the money supply. So much of it is very similar to Carter, but not all of it is like Carter's.
But under President Carter, was energy and food part of the equation for inflation? Because
yes.
Hasn't that been taken out since his administration?
So when we measure the consumer price index, it includes food and energy. Because food and energy prices fluctuate so wildly, the government said, well, suppose we take that out and we look at inflation excluding those two items, which we'll now call the core inflation rate. So we didn't have a core inflation rate back then, but now we measure a core inflation rate. But still the CPI, Consumer Price Index, takes all of that into effect.
Yeah, so it was different between Carter and now.
Yes.
Okay.
Yes.
In the meantime, all over the news this morning is the possibility of Prime Minister Trudeau resigning, primarily over the inflation there in Canada, among other political things that are going on up there. But they too are experiencing inflation. How do you describe their inflation?
So actually, in the last half hour, he did resign from his party, and his party will have to pick a new leader. But Trudeau followed policies very similar to what Biden followed, and as a result, they end up with inflation very similar to what we had here in the U.S. So I imagine what will happen is the Liberal Party is still in power there. They may have an election at some point. But in the U.S. and in Canada and in much of the other countries, or many of the other countries around the world, these liberal policies that have caused just havoc with economies, most of them are being replaced by a more common sense approach and a more conservative approach. So I think in Canada, their inflation was very similar because Trudeau did what Biden did, but I think going forward that they too will take a more common sense approach to things, and their inflation will start to go down also.
In addition to inflation and interest rates are regulations, and the promise now of deregulating government again in so many areas. I mean, we're in broadcasting, we're regulated to death. And so I'm wondering, is deregulation, how does it play into the economic picture when it's really very emotional, but how does it play into the economic picture?
So when businesses are starting or existing businesses go to expand, there's a whole bunch of regulations that they have to follow. That makes it more costly to start a business, makes it more costly for businesses to expand. Businesses take a look at a sound business decision. We're going to invest some money, start a business or expand a business. We look at the potential returns from that, and we determine whether it's profitable for us to do that. Well, if the cost of getting started goes up, it means the profit margins get squeezed, and a lot of ventures that should be done may not be done just because of regulations. The other issue is time. When business goes to expand, you have to hit the market at the right time. If you're late to the market, you may miss something, or some other business may take advantage of the market conditions. The more regulations you have, the longer it takes business to get started and finally get a project up and running, and that's very detrimental to their success. There's so many regulations that we just simply don't need. Now, we're not saying eliminate all regulations. There are some regulations that are needed, but some of the regulations they have in place are just ridiculous. Really doesn't help anybody, slows things down, and is counter to economic growth and economic success.
All right, let me take a quick break. I got a big question, so I want to give him plenty of time to answer it on the other side. Go to muckrack.com/Michael Busler. There's a picture of the landing page, very resourceful. Check out his resources there. We'll be right back. Okay, welcome back. Always an honor to have back with us Michael Busler. He's a professor of finance there at Stockton University, New Jersey. He's a public policy analysis. He has a website, muckrack.com/Michael Busler. And there is the picture of the landing page if you want to check that out. Very resourceful. Professor, I was thinking through the break, President Trump wants to come back and give tax cuts to both businesses and the working class Americans. We all want that. If tax cuts are done too fast, does that increase inflation?
So the answer is it could. And if you have tax cuts that are just geared to increasing demand in the economy, mostly giving tax cuts to just consumers, that could be inflationary. However, President Trump's tax cuts, as Ronald Reagan's were in the early 80s, are supply side oriented. So what does that mean? They give tax cuts, not just to consumers to help them, but they give tax cuts to business. They also give tax cuts to all income earners, including the highest income earners. By giving tax cuts to the highest income earners, that creates more capital. And when you create more capital for investment purposes, that tends to also increase supply. So because these are going to be supply side oriented tax cuts, I don't see any inflationary impact. Now, just to bear this out a little bit, the tax cuts in 2018 that Trump proposed and Congress passed, which I think were extremely fair. Everybody's taxes, no matter how much you're paying, everybody's taxes were cut by 10%. Some of the people that had lost some of their state and local tax deductions didn't quite fare as well in places like New York and New Jersey. But essentially, everybody's taxes were cut 10%. Now, to me, that's fair. The Democrats say, well, look, it's a tax cut for the wealthy. Well, if somebody's paying $2,000 a year in taxes, 10% of that, you're getting a $200 tax break. If somebody's paying $2 million a year in taxes, 10% of that, you're getting a $200,000 tax break. But it's still proportionate. Everybody went down 10%. So when he does things like that, the very wealthy end up paying lower taxes. They still maintain their lifestyle, but they have more money to save and invest, and that creates more capital. So if any tax cuts he'll do in the future, he'll make sure that Trump tax cuts, which expire at the end of this year, won't expire, and any further tax cuts will again be done proportionately. So everybody gets a 10% tax cut, but that means that it creates capital, and that adds to total supply. So when you're increasing demand from consumers, you're also adding capital and cutting businesses' taxes, so you're increasing total supply. And as long as supply increases the same amount of demand, there's no upward pressure on price.
Okay, that makes sense. DOGE, Department of Governmental Efficiency, doesn't have any power, but it does have the ability to uncover a lot of waste, and a lot of people seem to be pretty excited about this, which goes back to the term of limited government. Now, this is all emotional, and yet Wall Street reacts to emotion. But it appears that people want limited government. How does that play out economically?
So in 2019, the federal government spent approximately $4.5 trillion. In 2025's budget, they're going to spend $7.4 trillion. So we had that huge $3 trillion annual increase in government spending, much of it due to what was passed in 2021. The American Rescue Plan, the economy was growing at a 6% rate. We didn't need to be rescued yet. There was $3 trillion passed there, and other things that Biden passed added so much excess demand to the economy, and that, as I mentioned, contributed to the inflation. Now, DOGE is going to come in and say, listen, do we need to spend all this money? One study I saw said only 6% of the government workforce works full-time in their office. The rest of them work part-time or work at home, and you're not sure of what the efficiency is there. Remember, when Elon Musk bought Twitter, he reduced the workforce by 75%, and the company still functioned well. It's those kind of cuts that we need. We don't want to reduce needed government services. We don't want to do that. But all the money we're spending on things that we really don't need to spend it on, they'll end up cutting. Now, you mentioned they don't have direct power, but they'll make suggestions. And as long as the Republicans control, although barely, the House of Representatives and the Senate, they'll be able to get legislation through that will reduce this government spending. Everybody should be in favor of this. They're not going to cut Social Security. They're not going to cut Medicare, what we call the entitlement programs. They're going to have to deal with those somehow because they're about to go bankrupt, but they're not going to cut spending in those areas for anybody who's collecting now. The rest of it we can take care of, cut a lot of government spending, get closer to balancing the budget. Remember, we're $36 trillion in debt as a result of all these deficits. Well, the first thing you do when you're stuck in a deep hole like that, I mentioned this on the show before, is to stop digging. So let's get the deficits down, get as close to the balanced budget as possible, and then we'll work on getting the deficit down. Let me say one other thing. President Trump is copying essentially what Reagan did, but also what Bill Clinton did. In 1997, he had the capital gains tax rate reduced from 28 to 20%. That created so much economic activity. The economy grew at a 4% annual rate in each of the 4 years. Total tax revenue went up, not down by cutting tax rates. It went up. And working with Newt Gingrich, who kept spending down, they had a surplus in the budget for 4 years. That's the last 4 years. In the last 65 years, we've had a surplus in the budget. President Trump is going to try to do something like that.
Not to mention no tax on tips or Social Security. That's got to be a huge boost.
It's not a big pain to government revenue. In other words, not a whole lot of dollars collected. There are some, but it's going to be a big boost to people that are retired and living on Social Security and people that get tips. And it's so hard to determine exactly how much you got and how much the IRS is going to tax. And they have these weird formulas and people are not sure, did I do the right thing or not do the right thing? Are they going to come after me? Getting rid of tax on tips. And I don't know why we tax Social Security in the first place. This is money people paid in for 40, 50 years. They're getting the benefit of it when they retire and don't have, for the most part, don't have a lot of extra income. That should not be taxed. I think that's going to be a big plus for people on Social Security and a big plus for people in the hospitality industry that depend on tips for their income.
I totally understand downsizing businesses, your own lifestyle, things like that. But downsizing a business and downsizing government is expensive. You have to pay to get rid of these people.
There is a one-time fee because there's severance packages.
Yeah.
Some of these have certain contracts. There's costs to terminate, but we have to pay the cost now. because the longer this goes on, the worse things are going to get. We can't have huge budget deficits and a $36 trillion public debt into the future. Our children, grandchildren will not be able to take care of that. So whatever the price is, we're going to have to pay it now.
So do you expect a little bit of a surge in the unemployment rate as these people are now terminated?
I don't think it'll be a significant increase. In most areas, we still have pretty much of a labor shortage. Even today, not as bad as it was before, but even today, there are more job openings than there are unemployed people. Now, we have what we call structural unemployment problem in that the unemployed people don't necessarily have the skills to fill the jobs that are open. But by reducing the government workforce, these people will go out into the industry and start to be productive there. I don't see a big spike in unemployment as a result of this.
So, Professor, if you were sitting up in the crow's nest looking down on this administration coming into office, do you see any big potholes out there they should avoid?
So there's a whole lot that they want to get done. Because they have only 53 votes in the Senate, whatever they can pass in the House, and they have a very slim majority there. Remember, 2 members of the House are going to leave and become part of Trump's cabinet. Matt Gaetz left. They're going to have a special election for him shortly. So they still have a very slim majority. If they can get things through, they have to get it passed by what they call reconciliation, which means you don't need 60 votes in the Senate. You only need 51, which they can get through. What are the potholes ahead? There's some of the Republicans that just aren't quite on board with the program, and you can't afford to lose more than a couple of votes. We saw with Speaker Johnson, we had an extremely tight majority. We can only afford to lose 1 vote. There were 3 people said they weren't going to vote for him. So they somehow got convinced, that 2 of them at least, that they should. So the potholes are, will we be able to convince all of the Republicans? And I would really like to see some Democrats, and there's a chance you're going to get some Democrats. There are moderate Democrats. We used to call these people blue dog Democrats, who are more moderate, Joe Manchin type. He's not in the Senate anymore. But people like him who still are more moderate, if we get some of those people to go along, it'll make things easier. President Reagan was able to get, I think, 46 Democrats in the House of Representatives to go along with what he wanted to do, and some number in the Senate. So the potholes are, if we can't convince everybody to go along with this, it's going to be a very difficult road.
I'm just wondering how, though, a Democrat can go back into their district and run on the fact that they voted against lowering gas prices.
Yeah, I don't know how they're going to do it. They're going to try to say, well, we voted against energy expansion because we're more concerned about the environment, and if we voted for this, people wouldn't be able to breathe anymore, so that's why they had to do it. I agree with you. It'll be a very difficult sell when they go back to their constituents, but they'll frame it as an environmental issue, not as an economic issue.
Okay. Well, Professor, always an honor to have you. Let me say to our viewers and listeners, go to muckrack.com/Michael Busler, B-U-S-L-E-R. There's a picture of the landing page, very resourceful. And you can track and follow him there. And are you back in school?
No, we don't go back for 2 weeks yet. Today would be canceled anyway. There's a massive snowstorm that is just headed our way here, and we're having a lot of snow, so I don't have to go back till the day after Martin Luther King's birthday.
Okay, that's also the day after the inauguration.
It is.
Yeah.
Listen, I wanted to wish you a happy New Year, and when you send me those presents at Christmas time, I value all of them. So thank you very much for that.
You're well deserved. Thank you for your time, friend. Talk to you soon.
Take care.